Hello traders, this is DAX recap video for Monday, January the 28th. And in front of us is the updated chart with zones that was posted before the open. And also I posted additional 240 minutes chart with some bearish divergence that was one of the subjects from my previous video. And also this additional file where we can see news and earnings announcement for this week. And as you can see, it's plenty of news and also earnings announcement. We had Caterpillar today, and tomorrow on Wednesday and on Thursday, those companies are basically the market movers, the major market movers of the American markets: Apple, Microsoft, Facebook and Amazon. It's going to be very important how the market will react on those earnings. Now let's go to the charts and to see where were our opportunities. As said in the morning notes, this zone here is our bull bear zone for today, so buyers need to hold above. And I said that this zone here, which was main resistance in the previous week, that we will use as a gauge of the market strength, or maybe entry on pullback, and then on this minor zone here, buyers can react from this minor zone, but it is an aggressive zone of support. Now let's see where were the opportunities. So in the pre-market session, which starts from here, from this line here, until the open, market was contained inside this rectangle. So pre-market high was here, pre-market low here, and market was contained inside the 48-point range. And our first trading opportunity, and knowing that what was the context? The context was that the market was tired. Tired market means the market that was moved higher, made a consolidation, made a good breakout. It was not the last Friday, but one Friday before that, of 250 points that was consolidated, and now made another push higher, but this push was with a much less momentum and speed than this one. And this is if we want to see that on 4-hour bearish divergence here, it is a sign of a tired market. And what would we expect of the tired market? And usually tired market, a tired up market, is going to be either a sideways market, or it will make a pullback, and the buyers will react then and buy that pullback. Now first trading idea, or first trading opportunity for today, which as you can see is a very narrow range day. Now is RTH session is already over, it is almost 6 p.m. but DAX still remains contained in like 80 points only. So first opportunity was when we observed this bull flag here, and market is trying to go above into this zone and failing to short here at the exit of this zone, because zone was already tested in the pre-market and was tested on Friday. Price went through it 2 times, and it is on our screens now for gauging a market strength or entry on a pullback. And we had a pullback now, and that was our short opportunity, but market really didn't do much. It bounced immediately from pre-market low. Now you could attempt a long on a pre-market low. It is a valid idea and it is a valid trade. So this here, short from bottom of the zone to pre-market low, really is just 25 points, not good enough to close here. And basically if you didn't take any profit here, it could be a break-even trade. Now because we really have to be patient and defensive in this kind of environment, we know that we are in the environment when the market is tired and it could go sideways, and the market that goes sideways, that is the market doing this false breakdown, false breakout, chop around market. And in that kind of environment you should be defensive, not to allow that the trade goes from like plus 30 points to to the stop loss. And for you to lose minus one R, it is not. There's no need to be stubborn or extremely patient in this kind of days when this zone was already been traded through in pre-market and the previous day. So you could attempt, of course, long from here. It would be a valid idea. Just note that if you are going to use pre-market references as entry point to initiate a trade, it is always much better if you have a confluence with the trend line or with the zone or with the Fibonacci retracement, with other references. In this case, this long was leaning only on pre-market low, nothing else. So both of these trades are like second grade trades, nothing to worry about, nothing to be sorry if you have missed it. From here to here, as I said, pre-market range was less than 50 points, so again nothing much. But then we are come to this here, this opportunity. Market is tired, it makes a move to pre-market high and then struggles, went below. This here could be your entry point, or if you want to be more sure, or you want to be conservative, to think about, because market is slow now, there's nothing to chase, you could even enter here on this second test, because by then it is clear that market doesn't have the strength to go above pre-market high, and the sheer inability of the market to go higher, to go above pre-market high and to leave this zone is good enough reason for you to attempt a short with your stop above this failed breakout attempt, and to target at least pre-market low, if not this minor zone. And anywhere from here, from let's say middle of the zone, from 255 to the middle of this zone, you get like 50-55 points. So it could be a good trade. This was actually the best trade that we could take today. And if you had some profit best from this trade, because this has the most meat, so to say, to catch something here in these two second grade opportunities, there's really nothing much. But then you could observe that this was from here a weak bounce to the pre-market high, and you could attempt even an additional trade from here, expecting the market to evidently at the end of the session roll over to this bull bear zone. But for this you should really have the you gotta help of the big brother of the S&P, and S&P currently is like this. It has bounced first from this support level here after this move, and this move was because of some of the bad earnings. As you can see, Nvidia is down 14%, and it has moved down the entire technical sector. As you can see, FANG stocks are all down, but maybe even more. What is more important than the Nvidia is Caterpillar, which is currently almost 10% down. And Caterpillar is the big industrial company which produces heavy machines and vehicles. And you could Google about it if you don't know what Caterpillar is, but it is a very, very important company for US. And that was it about these opportunities. As I said, this here is an additional trade, also not something that you must take. This here is the only school book trade. Inability to go above pre-market high leads to the next zone, potentially even to this zone, but since you don't know that in advance and the market is very slow, textbook trade would be to enter here or here and to close above this next zone. Just bank your 50-point profit and you can, you know, turn off the platform and have the rest of the day off. And I would also like for you to get to know my site. I launched my site today. This is my website. It is a free version, so I have this Wix commercials here. I made it with this Wix website builder, and it is some information about what I do, about me, blog. This is some of the stories that I wrote and my rants from the before. And this is examples where you can see from each month, starting from October, November, December and January, and each of these days has its video on YouTube. You can browse these pictures like this, or you could click here for the full screen, which is much better, and you can see now what the chart was before, what was after, what was said in the morning notes, where were the opportunities, and from the more detailed view there is my YouTube channel where I publish all these videos. And this is it for me for this video. Let's wrap it up. I like to, you know, for you to have a good day and good trading, and tomorrow you will get another set of charts with morning notes.